Hey everyone, welcome back to Corporate Decoder, the place where we decode the complex world of public companies. And today we're diving into Cadrenal Therapeutics Incorporated's latest filing. And let me tell you, it is all about making money in the market, or at least trying to before we get started. If you love getting straight to the point, insights from official company filings without all the jargon, make sure you hit that subscribe button. And for more exclusive content and discussions, join our Discord community. The link is in the description below. It is a great place to connect and share your thoughts. So what is the big news here? Cadrenal Therapeutics Incorporated filed a current report, essentially an 8K, to let everyone know about something important that happened. It is like a public announcement of a significant event. The main point of this filing is that Cadrenal Therapeutics Incorporated, or Cadrenal as we'll call them, announced they're going to sell more of their stock. Why are they doing this, you ask? Well, they have a program for what is called an at-the-market offering. Think of it like this: they already have shares out there in the public market, and now they've decided to offer up to about $1.7 million more of their common stock. They are selling these shares through a financial firm called H.C. Wainwright & Company, Incorporated, or Wainwright as their sales agent. This isn't a one-time event. They can sell these shares from time to time, meaning as market conditions allow and they see fit. This at-the-market offering program has been around since March of 2024. And get this, since they started this program, they've already sold a whopping $10 million worth of their stock. That is a significant amount of money raised. Now, when a company sells its stock, especially like this, they need to have the proper paperwork filed with the US Securities and Exchange Commission, or the SEC. This offering of stock is being done under a registration statement that was filed back in March of 2024 and was officially approved by the same year. This registration is what allows them to legally sell these shares to the public. So how does this at-the-market offering actually work? Cadrenal will set the rules for selling their shares. They'll decide how many shares to sell over what period, and they can set a minimum price below which they don't want Wainwright to sell. Wainwright, acting as their agent, will then try to sell these shares in the open market pretty much at the going rate. This is a common way for companies to raise capital without disrupting the market too much like a big single sale might. Of course, Wainwright is not doing this for free. They'll receive a fee, which is 3.0% of whatever gross sales price they achieve for the shares they sell. So for every dollar they bring in, they get about 3 cents. This is pretty standard for these types of agreements. Cadrenal also has the right to stop this whole process at any time if they choose to. And Wainwright can also end the agreement under certain conditions, especially if something drastically bad happens to the company, like a major negative change. The company also got a legal opinion from their lawyers at Blank Rome Incorporated. This opinion basically confirms that the shares they plan to offer and sell under this agreement are legally sound and valid. This is another piece of the puzzle to ensure everything is above board. And for those who want to dig into the nitty-gritty details, the actual agreement between Cadrenal and Wainwright is filed as an exhibit. Exhibit 1.1. This is where all the contractual terms and conditions are laid out. It is important to note that this report itself is not an advertisement to buy their stock. It is an informational filing. Any actual buying or selling of these shares would be through proper investment channels and would have to follow all securities laws. Finally, the filing lists the exhibits that are included. These are the supporting documents, like the legal opinion and the actual agreement, that back up the information presented in the report. They also provide what they call an interactive data file, which makes it easier for computers to read and process the information. Now, let's put on our investor hats and look at what this all means. Cadrenal Therapeutics Incorporated is essentially saying they need or want more money to operate or fund their projects. Raising capital through an at-the-market offering is a flexible way to do this. They've already raised a substantial $10 million, which suggests they have ongoing needs for funding, likely for research and development in the biotech or pharmaceutical space, given their name. The fact that they are exercising this option again to sell another $1.7 million indicates continued confidence in their ability to sell shares at the current market price, which is good. It also means they are potentially diluting existing shareholders a bit more, meaning each share represents a smaller piece of the company. However, this dilution is often a necessary evil for companies that need capital to grow or develop new products. The market has reacted positively to this news, but the real test will be how effectively Cadrenal uses this new capital to advance its business objectives and ultimately generate revenue and profit. A key risk here is always whether the company can achieve its development milestones, as the stock price is heavily dependent on future potential rather than current earnings for companies at this stage. Alright, that is our breakdown of Cadrenal Therapeutics Incorporated's latest filing. What is your take on their capital raising strategy and what it signals for the company's future? Drop your thoughts in the comments below. If this analysis was valuable, Hitting that like button really helps our channel grow, and subscribe for more deep dives into corporate filings. Don't forget to check out our Discord in the description for more community engagement. Thanks for watching. See you next time.